is an investor to do? Let's ask famed Wharton School professor Jeremy Siegel. He joins us today from Philadelphia. Professor, it's good to see you. Welcome to Overtime.
Yeah, I agree with you, Scott. This week was brutal. Today was brutal. Let me tell you, we're in a recession. It's a mild recession. It's not an official recession by the NBER, certainly not yet. But this first half is negative GDP growth, and it's ending on a slide. And, just when the Fed is, the most aggressive because it waited far too long, it's interesting. I mean, the data that I found so interesting on Wednesday, more even than the 75 basis points FOMC was that retail sales data that we got in the morning. Wow, that was shockingly low and momentum downward. And every single indicator we've gotten since then has really surprised pretty dramatically on the downside. So we're cooling off the economy. Let's just hope it's not too fast.
You point to a significant issue that we need to discuss, and that is the idea of a Federal Reserve that waited too long and now is acting too much. And that seems to be where we are in this world, what has unsettled this market so dramatically, this very issue that because they waited so long, Professor, and they're doing what is deemed to be too much now, they're going to break something along the way.
Yeah, and remember I commented, 3 weeks ago that we already had stopped the growth of the money supply, which was the second largest monthly decline in 60 years. I was sort of startled. I said, something's going on here. We're going to get another money supply soon. It looks like they're stopping the economy right in the tracks. We don't want to go through the windshield here, slamming on the brakes. They had to do it what they had to do. We might be surprised instead of 50 to 75 basis points in July. It might be 25 if this slowdown really continues. Now, we saw oil up a bit today, but we know so many of the other commodities have rolled over. And the economic momentum is really sharply turned negative. And I think that's certainly something that the Fed has to be concerned about going forward.
You can't have it. You can't have it both ways, though. You wanted them to do 100 basis points.
I wanted them to. Yes, and it's to capture the negative that we're serious, and I think they did that. We've seen a rise. I look at the TIPS yield because I think that's the most relevant discount rate for the stock market, and I've never seen a rise like this. It was less than -1 at the beginning of the year. It almost earlier this week hit +1. Now that's a 2 percentage point increase in the discount rate. That is mammoth in a period of less than 6 months. So you wonder, why are stocks down 20%, 25%? Put that in a discount formula, and you will see why that is happening. And that is really all on anticipation that the Fed has to step on the brakes, slow that money supply. It is happening. Let's hope, they can't go overboard. They got to be looking at this data. Being too late sometimes means that you may react too much. Not yet, but we're in the problem. Now, Scott, let me say something on the good side. On the good side, despite the fact that the first half of this year, GDP is down, earnings are up 5% over the previous 6 months of last year. So even with a negative GDP growth, we actually managed positive earnings growth. So that's actually saying something. And also think about the fact that we're going to be in earnings week, and we're going to be at the end of the quarter in 2 weeks. Then 1 week after that is earnings season. I haven't heard a lot of warnings. We heard Target. Not yet. This is the time. Now, maybe the fall off, we're going to start getting them. But by and large, even with this slowdown, earnings are coming in fairly good. A definition of a recession technically is 2 consecutive quarters of GDP. Now, we're not going to get 2 consecutive. And by the way, the only reason we're having positive GDP, and I think we will get slightly positive in this quarter, is really what we saw in April and early May. End of May and June so far is a negative GDP by all indicators.